Ladies and gentlemen, here in this video, we will discuss the biggest events coming this week, including big tech earnings, Fed Jerome Powell on Wednesday, in which there's a lot of people that are wondering, including myself, are we going to see a Powell that sets the stage for a dovish pivot, that sets the stage to walk back some of the inflationary kind of impetus that they gave on Trump's potential tariff policies. After all, we have not gotten any tariff policies yet, besides Colombia that refused to take 2 planes full of illegal immigrants back, and within 2 hours, Trump put a 25% tariff on Colombia, and within 5 minutes, Colombia offered their presidential plane to take their citizens back personally. I guess that's how you get things done in the new American way. Now, beyond that, here in this video, we will also discuss the DeepSeek situation, whether this could be a black swan event for our markets or not. So there's a lot of people on X over this weekend discussing this and how this could be a disaster, the Cisco moment, if you will, for NVIDIA, because essentially, DeepSeek is apparently able to do what OpenAI's ChatGPT is done with 97% less dollar hollers. That could be a problem for capex spending with NVIDIA. Although I don't believe their numbers, a lot of people do, and I guess that's all that matters. So here in this video, we will discuss all of those things. Keep an open mind, I do recommend to all of you, whether you are bullish, bearish, or neutral on this entire situation. It's Lot on X says DeepSeek is the black swan OpenAI and NVIDIA didn't see coming. CNBC is all over it, questioning what happens next now that this is free open source model costs 30x less to operate on old hardware. They say it's going to be a wild week once investment media catches wind that DeepSeek requires 97% less compute but outperforms OpenAI. Suddenly, they'll be comparing NVIDIA to Cisco, which I think is, again, one of those situations where the damage may already be done. NVIDIA on Friday was down over 3%. Could this cause some nervousness in NVIDIA? Sure. Should the investment community jump to conclusions and believe DeepSeek's numbers? I don't think so. Now, there's some people saying this is open source. We'll be able to figure that out, blah, blah, blah. But we can't even get $100 billion Chinese companies to comply with audit standards, okay? Let alone a AI startup in China. So just keep that in your prefrontal cortex as you are making decisions. With that said, do I think this is NVIDIA's black swan moment? It could be. Probably not, though. And I think we'll know more coming tomorrow morning, but it is a possibility. And that I think you should be open-minded to as well. Now, in recent days, we have gotten Meta and Microsoft. Microsoft coming out and saying they're good for $80 billion of capex spending this year. Meta coming out saying they're good for $65 billion, raising their capex guidance for this year. We do have those earnings this week, though. We have Meta as well as Microsoft earnings, as well as Apple earnings, which Apple is going to give us probably not great AI news, so just add that to the equation. But if Microsoft and Meta come out and start to question their capex guidance, if they start to kind of throw doubt on whether they may not need to spend that much, then that would be the biggest pressing issue, I believe, for this week. So I don't think we're going to have to wait too long to get the answers from this. Now, there's a good chance that we could bounce back, that NVIDIA could bounce back a bit from the selling that they seen on Friday. Microsoft was down, Apple was down, Netflix was down, NVIDIA was really down the most, down over 3% and down 0.5% again in after hours on Friday. Let me know down below in the comment section if you think this is the AI Black Swan event, the Cisco moment for NVIDIA. Again, down below in the comment section. Now, starting off on Monday, you have SoFi, AT&T, and other banks. Monday pre-market. Monday and after hours, you really just have a lot of banks as well. You do have AGNC Investment Corp. You have Crane, Berkeley, Alexandria, and Nucor. Tuesday pre-market, Boeing, GM, Lockheed Martin, Royal Caribbean, RTX, JetBlue, Cisco, and Kimberly-Clark. Tuesday in after hours, Starbucks, SAP, Lending Club, Logitech, Stride, PCA, Chubb, F5, and Stryker. Wednesday, ASML. That's one of the companies that creates some of the equipment to actually make semiconductors. So they've had some really bad earnings recently. We'll see if that gets a little bit better here in this quarter. That could be a decent mover for the AI category. Progressive, T-Mobile, ADP, Teva, General Dynamics, NASDAQ, and others. Wednesday, Tesla, Meta, Microsoft, IBM, Lam Research, ServiceNow, Wolfspeed, Celestica, and Western Digital. Thursday pre-market, UPS, MasterCard, Dow, the Blackstone Group, Nokia, Southwest, Caterpillar, Comcast, and Mobileye. Thursday and after hours, you have Apple, Intel, Visa, KLA, CN, Atlassian, Baker Hughes, Decker Brands, United States Steel, SkyWest. And then Friday, you have ExxonMobil, Chevron, AbbVie, Colgate, Phillips 66, and Charter. Now, what's actually interesting is you tend to see Google and Amazon also report alongside Apple. So normally you see Google report alongside like a Meta. Most of the time it's like Google and Meta or Google and Amazon, right? That report the same day. And it's usually in the same week as Apple. But they're not listed here yet. So they're going to be reporting the following week, which I do think is kind of weird. Now, the big thing that markets care about in regards to these big tech names is monetization of AI. Investors want to know that the $80 billion Microsoft is going to spend this year on AI is going to actually make them something. Okay, that it's not just throwing money away for many years. Same with Meta. Meta is expected to spend about $65 billion in AI. And Wall Street wants to know they're not just pissing away $65 billion. That's where DeepSeek comes in. The news that DeepSeek has created a ChatGPT-like large language model for $6 million really undercuts everyone else. Now, I don't believe China, okay? We can't even get auditors in China. Why would I believe a startup company in China that they create a large language model undercut all US AI companies by a long shot? I think to a certain degree, that news was designed to stoke fear in US AI companies. Now, some people say it's open sourced and eventually the exact numbers will come out, blah, 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 blah. That's probably not true. It's probably not going to happen. We'll never know definitively. And that's the thing. Does Wall Street kind of realize that you can't trust China's numbers and shrug this off? Or does this become a larger issue? We've seen on Friday, NVIDIA and many other AI stocks, or deemed AI stocks, were down a lot. And that did pull down the broader index. But it didn't go full-scale panic mode on Friday. It was close for a minute. It felt like we were starting to get a little scared there. But we did kind of hold up a little bit. I think over this weekend, we've had some time to reflect on this. You could see a recovery here. You could see a bounce. You could see some of, the doubt start to creep in that maybe DeepSeek is not being 100% accurate with their numbers. That's my feel about this, that you could see markets kind of shake off that news and get back to business as usual and start to, look ahead to big tech earnings. Now, we also have a lot of economic data coming out this week. On Monday, Chicago Fed National Activity Index, new home sales for December, new home sales month over month, as well as the Dallas Fed Manufacturing Index all come out on Monday. You do have a 5-year bond auction as well. These are going to be important because the Fed controls the short end of the curve. So the Fed controls like the 3-month to maybe 2-year auctions and treasury yields, okay, with their policy. They don't really control the 5-year. They don't control the 7, 10, 20, 30-year bonds, okay? That's where you actually get your mortgage rates from, your auto loan rates from, right? So that's why the Fed cutting rates has not cut rates for your credit cards or for your mortgages or for your auto loans. So these longer duration bond auctions are important. Okay, now Tuesday you will get durable goods orders month over month. Last month was negative 1.1%. We'll see if that gets revised away. We are expecting a positive 0.8%. Now, S&P Case-Shiller home price year over year expected to be up about 4.1%. CB consumer confidence is expected to also come in a little bit higher than last month's 104.7, coming in at 106. Richmond Fed Manufacturing Index expected to be terrible still. Dallas Fed Services Index expected to be in line with last month. And then we get a 7-year bond auction on Tuesday, January 28th. So some big data, Monday, Tuesday, durable goods orders is really the biggest thing. It'll tell us if the economy is still holding up a bit. But Wednesday's your big day. And you have retail inventories excluding autos, goods trades balance, some smaller data, some oil data. But it's the Fed. Now, the Fed's going to be the biggest wild card this week because the Fed's going to be asked about Trump and about Trump's calls on the Fed to immediately lower rates. Now, the Fed has made it very clear before the inauguration that, well, they're not necessarily in a rush to raise rates. They're not necessarily in a rush to cut rates. They're waiting to see what Trump policies look like. We're probably going to hear a lot more of that, but you could see some of it start to get walked back. You could see the Fed kind of try to prepare the markets for rate cuts. The Fed's not going to come out tomorrow or Wednesday and say, oh yeah, things are fine. We're going to be cutting rates multiple times this year. No, they're going to stick to their guns, but they're going to start opening up the door to cutting rates. Perhaps if Trump policies are not as inflationary, then that's something that they could say and start to kind of creep another rate cut into the markets, okay? Because the Fed does what the markets are pricing in. So it's really just jawboning the markets into, pricing one thing in versus another. So I'm actually optimistic that the Fed this Wednesday is going to start opening up the door for more cuts. I would also be interested to hear what the Fed has to say, if they comment on this, about the decline in current market rents. Current market rents just went negative for the first time since Q2 2010, and they really don't ever go negative. So that's disinflation in the shelter market, which is going to really help bring down those CPI numbers. So I think the Fed will be a positive catalyst, but don't be surprised if markets are a little bit nervous throughout the trading day on Tuesday and perhaps on Wednesday heading into the Fed itself. Now, on Thursday, GDP growth rate quarter-over-quarter advanced data for Q4 will be coming out, expecting about 2.7%. Last quarter was 3.1%. Initial jobless claims will be coming out as well, expecting 225,000. Pretty simple there. Higher is worse, lower is better. Real consumer spending, expecting that at 2.9% quarter-over-quarter, pending home sales month-over-month and year-over-year for December as well on Thursday. On Friday, core PCE month over month, expecting this to come in at 0.2%. That's not a terrible number. That's 2.4% on a 12-month annualized basis, but last month was 0.1%. So if we can come in lower, come in at a low 0.2 or 0.1, that's going to be really good. It's going to be really good for markets. Now, personal income month over month is expected at 0.4%. Personal spending month over month is expected at 0.4%. Personal spending, that's the same as last month. Personal income is expected to rise from last month's 0.3% again to 0.4%. Also, what's going to be important is Fed Bowman's speech on Friday. That'll come out at 8:30 in the morning. It'll be the first time that we hear from the Fed following Wednesday's Fed meeting. Chicago PMIs will be coming out as well at 9:45 in the morning on Friday. All of this week's data really sets us up for another volatile week. Therefore, after in the first week of February, when you get ISM manufacturing PMIs, JOLTS job openings on Tuesday. On Wednesday, you get the ADP employment change, ISM services. Thursday, you don't get much. But then Friday, you get that non-farm payrolls report and the unemployment rate on February 7th. So really the next 2 weeks are going to be pretty insane. Now, also some pretty big news today. It was reported earlier today that Colombia has actually rejected 2 repatriation flights, essentially taking illegal immigrants from Colombia that came to the U.S., taking them back to Colombia. They rejected those planes the ability to actually land in Colombia and bring them their citizens back. Trump's on it. Trump says he will impose an emergency 25% tariff on all Colombian goods coming into the United States. We'll raise that to 50% in 1 week. Now, again, just to kind of reiterate this news here from Finance Lot on X, this says DeepSeek is the black swan OpenAI and NVIDIA didn't see coming. CNBC is all over it, questioning what happens next now that this free open source model costs 30% less to operate on old hardware. And he says here in an older post, it's going to be a wild week. Once investment media catches wind that DeepSeek requires 97% less compute but outperforms OpenAI, suddenly they'll be comparing NVIDIA to Cisco, which obviously would, be a big problem. And honestly, I think that's one of the biggest wild cards for this week. Like, I can sit here and definitively say earnings are probably going to be really good. I can sit here and say the data is probably going to be a lot of the same old that we're used to. I can say that we're probably going to get a slightly dovish tilt towards the Fed on Wednesday. I can say all of these things confidently, but I cannot say for sure how Wall Street is going to take this DeepSeek news. If this could be a black swan event for NVIDIA, for our markets, or if it's something that's brushed off. I think we'll really have to see over the next coming, couple of hours and days, but there is a potential here that it could be really bad for NVIDIA. It really could throw into question why companies are investing so much when there has to apparently be an easier way to do it. Now, again, I don't believe the numbers, but judging off the sell-off we've seen from NVIDIA on Friday, a lot of people are believing these numbers that DeepSeek is throwing out. I really think that's the biggest wild card for this week that could affect, our favorite stocks out there, whether it's Tesla or small caps or cyclicals, all of the names that should do very well in 2025, even though there's a very strong bull case for those names. If you kind of see the market sell off, it takes everything else down with it. That is a risk, but again, we just don't know how much of a risk that's going to be until the markets open tomorrow. Ladies and gentlemen, let me know what you think about this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.